Well, thank you. I sort of wasn't expecting to be up here so quickly.
Part of my strategy.
It was. Yeah. I didn't get to have any coffee either. Well, thank you, Fred, for the introduction. Let me just say, the study was done last summer. We started in the process last summer. And, as Bob Hormats has mentioned, events have taken place that I'll come to the point where what could potentially come out of this study. Now, let me just start with a little bit of background on this. Political developments, as you all know, have sort of dominated the Egyptian scene since the Tahrir Square uprising of last January. Now, as the political aspirations of the people are being fulfilled, unfortunately, the economy has gone into a serious decline in the process, and possibly really, in my view, jeopardizing one of the main aims of the revolution, which was to improve the living standards of the Egyptian population and their welfare. So the current adverse circumstances, which I will describe to you, I'm sure many of you are familiar with them, certainly gives rise to three key questions. First, how do you deal with the immediate economic crisis in Egypt? Secondly, how do you meet the needs and demands of the public, which were a significant factor in the uprising against the Mubarak regime? And third, how can the international community help Egypt in achieving the first two objectives? So you've got a short-run crisis management objective, you've got a long-run, medium-term, long-run strategy to improve the living standards and the welfare of the population. What can the rest of the world do to help achieve those two objectives? Our paper sort of focuses, if you want to frame it, is on the third issue. What can the international community do? And not on the first two, which are, to me, very key, but they're not being dealt with here. Our argument basically is that in terms of what can the world community do, and we focus on one aspect of it, which is debt relief for Egypt. And our argument essentially is, the bottom line is that a significant reduction in Egypt's external debt could potentially reduce the widening external imbalances that are present and growing in the Egyptian economy, and also give the Egyptian government the resources to tackle the immediate economic crisis and address the longer-run problems that Egypt faces. So as background to what led to this study, if you recall, last May, in May of 2011, President Obama, in a major speech, was very specific. He offered Egypt $1 billion in debt forgiveness, a debt swap, actually, and another $1 billion in loan guarantees, similar to those that were offered by the United States to Israel. The debt forgiveness component was viewed to be a significant step in reducing Egypt's roughly $3.5 billion debt to the United States. The U.S. in that, and President Obama in that speech, also encouraged other G8 countries to engage in a similar debt swap. They're specifically converting debt instruments into equity or investments to foster entrepreneurship. So the line we took in this paper is that this is a very good start. I mean, this is a very important, very significant start by the United States in making this offer, and that the U.S. initiative should be expanded to include the other major creditors, if debt relief is going to, in fact, have a sizable impact on Egyptian debt. I'll say it early now. Total Egyptian debt, external debt, is $35 billion. 10% of that is, to the U.S. That's 3.5. Good. So our presentation basically is in three parts. The macroeconomic developments, very briefly, and the external debt profile of the country. Then, for our analysis, to get some lessons on what can be done with debt relief, we looked at some very specific cases of debt relief for middle-income countries, because that is an unusual group to get debt relief. Egypt got debt relief in 1991. Look at the case of Iraq in 2004. We looked at the case of Argentina in 2005, and then the case of Nigeria in 2005 as well. And the third part of the presentation is approaches to debt relief for Egypt. So what John and I have done is sort of divide up our talk. I will talk about the first two issues, and then John will speak about the approaches to debt relief. So let's look at macroeconomic developments to start with, just as a background and overview. In 2004, or so, mid-2004, a major economic reform program was launched under the leadership of the then Prime Minister Ahmed Nazif and his well-known international team of economists, including Yusuf Boutros-Ghali, Rashid, etc. The goal of this program was to remove bureaucratic constraints to growth by restructuring the financial sector, streamlining business regulations, further liberalizing foreign trade, and most importantly, reducing the role of government in the economy, to move Egypt away from a state-controlled economy to a market-oriented economy. Of course, luckily for Egypt at that time, there's a very favorable international climate too. So as a result, Egypt grew very substantially. It reached 7.2% growth rate in 2008, its peak growth rate. Egypt also managed to avoid the consequences of the global financial crisis, and during 2009, 2010 grew at roughly about 5%, which isn't bad for Now, inflation was high, yes. Current account, the country was running surpluses. They're building up reserves, international reserves. Everything was going swimmingly. Then 2011. And the picture really worsened on virtually all fronts, across the board. The growth rate fell to about 0.5%. And inflation didn't come down, it stayed in double digits. After having, looking as if it was coming down over the years slowly. Excuse me. And the current account balance deteriorated very sharply. Remember, Egypt was running surpluses, current account surpluses. And so it started running a current account deficit in 2011. Two main reasons for that. Of course, the loss of tourist revenues, that was important, and the loss, sharp reduction in remittances, workers' remittances coming to Egypt. Partly that was domestic political reasons that remittances dropped, but the most important reason was Libya in that case, because there were a lot of Egyptian workers in Libya, and naturally they stopped remitting because they returned back. Fiscal deficit climbed to over 10% of GDP, and as a result, total government debt and external debt, of course, rose. But the most striking development, to me at least, was the loss of international reserves during the course of the year, which fell from a high of close to 36 billion, which it was in 2010, 35.2 billion in 2010, by half. Down to 18 billion by the end of 2011. And I think this is a very important issue, and right now Egypt is continuing to face roughly about a $2 billion loss every month. Now, one of the things behind it is, of course, the fact that Egypt, the Egyptian exchange rate, which is defined formally at least as managed floating, is not. There is a high premium placed on stability of the exchange rate of the Egyptian pound by the central bank and by the government. So keeping the exchange rate fixed in the face of this loss of international, in the face of this sort of widening external imbalances, meant you had to lose reserves. And so you basically, but I should say that when people say, well, Egypt was operating a flexible exchange rate policy, my view is that it was operating a flexible reserves policy. It was just keeping the rate fixed and letting reserves go. One or the other. It had to do one or the other. It chose to lose reserves. So now, in terms of debt, as I said, external debt, Egypt is the largest debtor, at least in dollar terms, largest debtor in the Middle East, North Africa region. Its total debt, its total external debt, was 35 billion, about 15% of GDP, at end December of 2010. 90% of this debt is owed by the public sector. So it's not private debt, it's public debt. Now, the interesting thing is, of course, 15% debt is not all there is to it. There's a large domestic debt too, roughly 50% at the end of 2010, it was 57% of GDP. The good thing about that debt is it's government debt, but it's held largely by pension funds and state-owned banks, and they're unlikely to sell it off. So they felt, the Egyptian governments in the past have felt okay with that debt. Now, let me just go through, in the interest of time, let me just go through two cases. I mean, we have other cases to look at in debt relief I'll go through two cases. The first one is Egypt of 1991. When Egypt received this debt reduction deal, and it was a consequence, interestingly enough, of Egypt's willingness in 1991 to assume a leadership role in the first Gulf War. This was a reward in that sense. And an agreement was signed to reschedule and reduce Egypt's debt to the 17 members of the Paris Club. So there was a Paris Club agreement. Prior to the debt reduction, Egypt's foreign debt was 48 billion. It's about 50% of GDP at that time. So in this agreement, debt service obligations were locked in at the reduced level for the first 3 years, providing a minimum of 15% debt reduction. The full implementation of the debt meant a 50% reduction in debt. So the package from the Paris Club debt relief package totaled 20 billion. And Egypt saved, as a result of this, an average of about 4 percentage points of GDP a year in debt servicing from 92 to 97. Now, mind you, when I say it's a decline of 50%, there was this debt relief package of 19.6 billion, which I have up there, represents the debt to the Paris Club. There was other debt too, and those debts then had to have received comparable terms, which they did. In fact, the United States also canceled 100% of the military debt at that point, which was roughly at that point $7 billion. That relieved Egypt of annual repayments amounting to more than 700 million a year. Other creditor countries, certainly the Paris Club, limited their participation to the terms agreed with the Paris Club. Now, in order to get this debt relief package, and this is very important, the Paris Club required Egypt to have an IMF program, and I think which I should define terms very carefully because a lot of IMF people in this audience required the Egypt to have an IMF arrangement, and I'm choosing my words carefully because I'll come to that in a minute on that issue. So, Egypt negotiated a program. They didn't like negotiating a program. They weren't happy with the program, but they felt they had no choice and they had to do this. And they went ahead. And it was a success, the program, in that sense. The main aim was, it wasn't a very large program, so roughly $400 million, given the size of their debt and so on. But they negotiated this program. And so they had all the conditions, and the most important one was they had to have a program with the IMF. They have long memories. Egyptians have long memories. They still remember 91, and they think, and that has a bearing on what's happening today as to whether they will have an IMF program or not have an IMF program. So, people have long memories in Egypt. They keep telling you they have 5,000 years of history, and so this is becoming an issue. Let me now move from Egypt of 91 to the other most significant case, and that is, which might have a bearing on the Egyptian one, is Iraq in 2004. And they're somewhat different now. Now, Iraq, basically, discussions of the cancellation of reduction in Iraq's debt began very soon after the ouster of Saddam Hussein and the regime. Now, led by the George W. Bush administration, a consensus was reached that Iraq would receive debt relief on terms that were unique in light of its economic resources, but not unprecedented given the political situation. Unique in terms of this is an oil producer that was potentially, was at that time producing 1.5 to 2 million barrels a day, and potentially could rival Saudi Arabia. So this was not viewed as a poor country. Nevertheless, its current situation at that point was very precarious. This was a war going on in there. And the rationale used was that, yes, there was a political reason. People did admit it, who were responsible, did admit it, that debt relief was being provided for both economic and political reasons. Now, it has been provided in the past for political reasons, so this is not a new thing. Basically, Egypt in 91 received special bilateral debt relief from the United States for political reasons. Pakistan is another example which has received debt relief for political reasons. Jordan, Poland, there were other cases, and people came up with precedents so that Iraq didn't look that unusual. Now, the interesting thing, of course, about Iraq's debt was huge. And so you would think that at 142 billion, it's 5.5 times Iraq's GDP at that time. The fact of the matter is that this was not a balance of payments problem. This is a huge debt problem. The reason it wasn't a balance of payments problem is because Iraq was not servicing any of this debt. They were just not paying. They weren't paying anyone at all. So it was just sort of, if you like, a notional debt, including, this was all interest arrears coming in and building up this. They weren't borrowing. Nobody was lending, obviously. But these are sort of the cumulative interest rate arrears that were building up to this huge amount. Now, the debt relief granted by Paris Club creditors in 2004 was really the largest in the club's history and a real milestone in Iraq's post-war reconstruction efforts. The core of the argument was to reduce the stock of debt owed to Paris Club creditors by 80% in net present value terms in 3 stages. And now, here comes an interesting case. What about an IMF program? Doesn't the country need an IMF program to get a Paris Club debt relief? And here's where we get to the fine language issues. What was argued was, at that time, that it was necessary to have an IMF arrangement. You didn't have to have an IMF program. And the reason you could say we can't have an IMF program is because at that time, IMF staff couldn't travel for security reasons to Iraq. There was no way of monitoring the situation. We had virtually no data. I was actually, in fact, in the head of the Middle East department when this program was negotiated, or this arrangement was done. So the lawyers then came up with this idea that it didn't have to be a program, it could be an arrangement. So what's an arrangement? Well, there are IMF programs and there are IMF arrangements. So we went for what is called an emergency post-conflict arrangement, whereby you can provide the country a small amount of money, a very, very small amount of money, which in fact they didn't even draw on. The Iraqis never drew on. And so provide them a small amount of money It has no conditions. It has no monitoring at all, because this is an emergency post-conflict arrangement. Okay? And you get assistance. And so you gave the money, and we got a deal. Now, what impressed me most personally was the fact that the United States, having taken the sort of view that we're going to go and get this debt relief, the person involved in this, incredibly persuasive, James Baker, all you know, incredibly persuasive, went around the world and was very instrumental in getting this thing. What really impressed me about him, I mean, he was able to get some kind of deal even with the more conservative Gulf Arabs on that one. But what amazed me was that he was able to get a Paris Club arrangement at that time, and because here was a case where the Germans, the French, etc., opposed the invasion of Iraq. They were not in favor of all this. And then to come to them and say, okay, but you have to come and you know, he was incredible. He was masterful at twisting arms, and he did. So in the end, they needed a program for the second tranche, which they did have. By the way, they never drew on any of the IMF programs. They were all precautionary arrangements. So by the end of this Iraq program, the total stock of debt was down to a much more moderate 33% of GDP, which in fact is being serviced. There's still outstanding debts to the Gulf Arabs, which are still being negotiated. But in some sense, nobody's paying, nobody's receiving anything. And there's some, I don't know if this thing will ever be settled, but the fact of the matter is that the creditors are not pressing for payment, and the debtor sure is not ready to pay. So, because they believe that this was the odious debt problem, which is, you know, this was debt incurred by Saddam Hussein. So I think if, as I said, I'll skip over the other cases which are in the paper, so if anyone is interested in that, and go to one other thing that I think is relevant here, which is not quite debt relief, and I would move to that slide, is the Israel Loan Guarantee Program. And the reason we look at this program is because in President Obama's speech, the United States offered $1 billion in loan guarantees. And we looked at the case of Israel as to what was the situation in Israel. Well, how did this thing work in the case of Israel? And so in that paper, in the paper we have that description. There was essentially what you're doing is if you got the United States loan guarantee, when we wrote the paper, we said, and it might still be in the paper, we said it will allow Egypt, like it allowed Israel, to have AAA status. Not quite sure, but we did this before the downgrade of the ratings. But nevertheless, it allows the country to be able to borrow in international markets at a much lower interest rate than it could possibly hope to get on its own. So that's really the part of it. And by reducing debt servicing, it has an impact on the net present value of your debt. It's the interest rate that you're using for calculating net present value. It reduces net present value of the debt. So that's the case of Israel. And so we think that there's some merit in that. I think that the possible approaches that John is going to talk about, and I'll just briefly introduce them, is he's going to talk about these three, the Paris Club idea, the Friends of Egypt idea, the loan guarantees. I just want to show you a table on Friends of Egypt, the Deauville Partnership, as to what the situation was in the beginning of in the spring of last year, the Arab Spring of last year. What were countries ready to do, or at least said they were ready to do? Here's a picture of what they were at that point. We were thinking the IMF would have a program, roughly $3 billion, which is the same number that they're negotiating now. The World Bank had said $4.5 billion over 2 years. Saudi Arabia with $4 billion. Qatar, of course, $10 billion. I know, George, I was going to say that myself. The United States, of course, had this Obama speech, so $2 billion. African Development Bank, EBRD, the UK, the Deauville Partnership, which had the G8, There's a lot of double counting in these numbers, so I'm just giving you a sort of picture. All I want to say is this, of this amount, of these huge amounts that have been pledged, supposedly pledged, at present, Egypt has received less than $1 billion. Less than $1 billion. Or just about $1 billion. Where does this billion come from? 500 million from Qatar, 500 million from Saudi Arabia. That's the only money that's come in so far. And Egypt today, today faces an external financing gap in 2012 of roughly 15 billion, 14 to 15 billion dollars. It has to come up with. If it cannot come up with this money from outside, its reserves will fall to zero. And because, let's say, let the exchange rate move. If they keep holding to the exchange rate, reserves are going to fall to zero. 15 billion is basically made up of a current account deficit of roughly 4 to 5 billion. They have another 3 to 4 billion in long-term and medium-term debt coming due this year. They have an equal amount of short-term debt that is maturing this year. And added to that, last November, the Egyptians went out and borrowed $3.5 billion in dollar-denominated sold dollar-denominated securities, good interest rate, but their maturity is 1 year. So in November, I know in the paper, John and I said the financing gap is 11. Well, since then, they went and borrowed $3.5 billion, which is due this November in 2012, upping the figure to 14 to 15 billion. That's what the country needs this year. John?
Well, thank you very much. As Mohsin has said, the division of labour between us is essentially that he talked about the things that concern the region as a whole, and he left me to justify the preoccupation with debt relief. Why are we advocating debt relief for a country which, according to some criteria, doesn't need it as much? Of three of the four cases which were reviewed in the book, both the cases in which Mohsin reviewed here, the international community was very much trying to help the country involved. That was what lay behind the decision to give debt relief from the public sector. That wasn't true in Argentina, clearly. There wasn't any public sector debt relief in Argentina. But it's true in all the other cases that there was a desire to help the country involved. Now, when a situation like that arises, one needs to ask the question, is it in fact in the best interest of the country to take debt relief? Because there are circumstances in which it clearly isn't. If it's going to jeopardize the future borrowing ability, and they have a continuing borrowing ability, then it clearly is not in the interests of the country to take debt relief, and it's better to stick it out. But we argue that this is not really particularly germane in the Egyptian case, because these are public sector debts. There are no private sector debts to credits to Egypt are quite minimal. Well, now they're 3.5 billion bigger than they were when we wrote this, but they're still quite minimal as a proportion of the total debt. That's still 10% of the total debt, something like that. Now the question arises, should one, is there in fact going to be a big loss of lots of confidence in a country because it doesn't pay all its public sector debts? And I really don't think the situation is the same as with private sector debts. With private sector debts, you need to make that trade-off very clearly, but in the case of the public sector, it's much less clear. And if in fact the international community decides that it wants to help Egypt, and we've heard that that is difficult right now, and that with that proposition. I fully agree, and I think it's difficult to disagree with it. But we hope that things are going to change, that when the Egyptian elections are over, when the Egyptian judiciary has decided this case before it, that the way will be clear and the international community will once again want to help Egypt. And in that situation, is it appropriate to help the country to provide debt relief? And there are three big advantages in giving any assistance that is given via debt relief. First of all, it appears cheap to the country that's giving it. I mean, this is already money that's been spent. It's not going to come back into the budget in future years. So it's less difficult than getting a congressional appropriation or parliamentary appropriation for new money. Secondly, as far as the country receiving the money is concerned, there's also an advantage in getting debt relief rather than in some other way, in that this is untied aid. There's no possibility of tying it to a particular item of expenditure. So it's a good form of aid to get from the point of view of the recipient country. And then thirdly, it gives the recipient country a chance to choose between receiving debt relief in the form of having lower debt, and look, Egypt still doesn't have the same external debt that Mohsin said it had had prior to the 1991 agreement. It still has an agreement. Private sector debt is roughly, it's under 10% of GNP, as opposed to the 50% odd that it was before. So that addition, that benefit was largely sustained between the 1991 debt relief operation and the present day. There's a choice between taking the relief in that form and having a lesser outflow in future years, and taking it in the form of getting a bigger cash inflow, borrowing more in the short run. Because, let's face it, if you have lower debt, you're enabled to borrow more from the private sector, from the public sector, it depends. But certainly anybody who looks at the amount of the volume of debt is going to be impressed by that. So there are two the two approaches available to the United States. First of all, conventionally, it's to go to the Paris Club. The Paris Club is an institution that was created in order to help countries that have got a heavy loans from the international community in the past, and we did a calculation that if the Paris Club gave loans on its most generous terms, 80% debt relief, then that would generate a stock relief of over $10 billion, a flow relief of $1.5 billion a year. The snag with this, as Mohsin said, it requires an IMF arrangement, which Egypt first had and then decided it didn't want to have, and then it's been talking lately of coming back to the IMF, but it's not clear whether Egypt is going to end up with an IMF arrangement, but certainly that's an absolutely firm condition for having a debt relief agreement. The second disadvantage of going through the Paris Club is that Egypt is not particularly debt distressed. The debt to GDP ratio that Mohsin put up a minute ago was 76% last year. Now that's lower than most of Europe, it's lower than the United States. It includes a large element that's essentially locked in, the domestic debt, and so it's not possible to argue on debt stock grounds that it's a particularly indebted country compared to the European Union. It's over the 60% Maastricht limit, but it's not that much over, not as much over as the average, the typical European country is. Secondly, if you look at debt to exports, it's much less indebted than there. I think you take the relevant figure is external debt, which is $35 billion. It's about it's not much over 10% of GNP. So it's a good bit less than in Egypt. Egypt is a good bit less than much less than the ratio that's been prescribed in the Paris Club for low-income countries. So it would be difficult to make the case that Egypt's problem is primarily excessive debt. However, that doesn't exhaust the US possibilities. It's also possible to contemplate an approach where the United States would take the initiative, and instead of going through the Paris Club with its rather restrictive conditions, instead it would convene a Friends of Egypt group. The advantage of that is that it could include some of the Gulf countries as well as the traditional donors. If you go through the Paris Club, you automatically lock in the traditional donors, but in addition, the donors that are most important in the case of the Egypt are in fact the Gulf countries. So you could bring them in to this arrangement. This would be an ad hoc group which would be convened by the United States. It has convening power. If the United States was to invite such countries, the chances are that they would accept, and if they accepted, then agreed an arrangement similar to the Paris Club, then in fact one would have a similar type of outcome, where one could get debt shock relief of over $10 billion and a flow benefit of $1.5 billion a year. This would also have the advantage of facilitating a long-term partnership building exercise with Egypt. Now, in addition, one could one could try an additional advantage of doing it through the Friends of Egypt route, is that one could then try to interest the other countries in giving loan guarantees. My view is that that's a pretty long shot, that there aren't too many countries that would be willing to go out and risk their limited creditworthiness for the sake of countries which they don't have, they aren't obliged to, as in the European Union. But nevertheless, there would be a possibility of doing that way. And so the United States could then urge other countries to follow the US lead. But ultimately, I think the main argument for doing it, for giving an element of debt relief, is that the Egyptians have said quite clearly that they want this, that they want to receive some of the aid which the international community is willing to give in the form of increased debt relief, and that's the main argument for doing it this way, in my view. Thank you.